OYO was once crowned at a $10 billion valuation, then it crashed to $2.5 billion in 2024, and now it's aiming to roar back at a $7 to $8 billion valuation. But can it survive its own past? From a single hotel in Gurugram to 1.6 lakh stays across 35 countries, OYO once sold us the dream of being India's Airbnb meets Marriott. Backed by SoftBank, it was once hyped at a $10 billion valuation and was the country's hottest startup. But today, it's being valued much lesser than expected. Cash is bleeding, lawsuits are piling up, and yet they want you to invest in what could be India's most dramatic comeback IPO. In this video, we'll talk about the numbers, the valuation, the risks, plus what the view is on the street. OYO, short for On Your Own, was founded in 2013 by Ritesh Agarwal when he was just 19. The idea solved India's budget travel problem. Over the years, it scaled into a global aggregator from India to China to Europe and even the US. Now let's get straight into the IPO details. It had previously filed for its IPO in 2021 to raise 8,430 crores via an IPO, 7,000 crores via a fresh issue, and 1,430 crores via an OFS, or an offer for sale. However, the valuation talk in 2021 was around 7 to 8 billion, lesser than the 2019 peak of $10 billion. The IPO money was supposed to be used to repay debt of about 2,400 odd crores to fund growth and strengthen its balance sheet. Notably, SoftBank, its largest investor, which is around 46%, was expected to exit, but a partial OFS was expected. Based on their annual reports, now we'll dig into their numbers, because this is where the story gets real. In FY22, OYO pulled in about 4,781 crores in revenue. That grew to 5,463 crores in FY23, but FY24 is actually dipped to 5,388 crores. So top line growth has basically stalled for 2 years. But here's the real twist: profitability. In FY22, OYO lost nearly 1,939 crores, and by FY23, losses narrowed to 1,287 crores. And in FY24, for the first time in its history, OYO swung to a net profit of 229 crores. And that's not just trimming losses, that's black ink on the bottom line. On an adjusted EBITDA basis, the story looks even stronger. 277 crores in FY23 and 877 crores in FY24. That's a 3x jump in operating performance in just 1 year. So the pitch here is clear. Revenues aren't booming, but profitability metrics have dramatically improved. The big question for investors is whether this is driven by efficiency or just aggressive cost cutting that could choke on growth later. So now, let's understand what's the talk on the street. OYO is expected to file its papers again to go public. I said again, as it's been more than 12 months since they updated their filing, and they'll need to redo the DRHP filing process. And if you go by some of the headlines, OYO is finally starting to look like the leaner, sharper version of itself. Economic Times called it one of the few true asset-light hospitality plays in India, putting it on the same league as Airbnb and Booking.com. Money Control pointed out how Ritesh keeps stressing that Tier 2 and Tier 3 cities, which is interesting because Airbnb and Booking.com barely scratch that surface. And GrowthX, they highlight OYO's tech edge, an AI pricing engine and app-led bookings, something that most traditional hotel chains just can't match. But the flip side of the story isn't pretty. Hotel partners have dragged OYO to court, accusing it of unfair contracts and delayed payments. TechCrunch reminded us how the company's valuation collapsed from the flashy $10 billion peak down to $2.5 billion last year. And even today, with the IPO being talked up, Economic Times reports that they're aiming for $7 to $8 billion, which still shows investors aren't fully convinced. Basically, the doubts haven't gone away. On one side, it's India's travel tech story with shrinking losses and global potential. On the other side, it's a business with lawsuits, wafer-thin margins, and no strong moat. So what do you think? Will OYO be a turnaround story or a value trap? Drop your thoughts below and let us know if you're going to apply for this IPO. And for more IPO breakdowns, follow FYERS, and I'm Jeff Curtis, and see you in the next one.